Right, again, adjusting entries, what we're trying to do here, at the end of the period, we want to begin the trial. It starts from the trial balance where we left off in Chapter 2, and we add in some of the adjustments to make that trial balance, which usually we call unadjusted trial balance, into a adjusted trial balance form. Okay, so trial balance already captures the majority of the transactions. The ones that happens on a daily basis, all of them is captured here under unadjusted trial balance. What we're trying to do here, there's just a few of the transactions that ties to some of the transactions that happened earlier. For example, like the people that we hired earlier, we may need to adjust some of their salary payments here. Or let's say that we had prepaid rent expense before, we need to adjust the part that already expired, the part that we've used up. Or some of the insurance premium that we paid before, we need to adjust the part that has expired, that's no longer in force. Okay, so there's just some of the adjusting entries that need to be made, but the majority has been done already under trial balance. Okay, so the purpose here again is because earlier that trial balance is incomplete with some of the adjustments under revenue and expenses that haven't been done. We want to bring those accounts up to date to its current status. Another example will be supplies. If we purchase, let's say, $2,000 of supplies January 1st, and within this month we actually used up a portion of it. Let's say those supplies are stationary. Usually within the corporation you would not be recording each and every value of each piece of paper or each value of the pens that you use, that the different offices uses on a daily basis, because these are minor transactions. Okay, so for these minor transactions, the dollar amount are very little. We don't capture this on a daily basis. We wait until before the monthly statement needs to be issued, then altogether we adjust what are the leftover supplies that we still have on hand and what are the differences. So at the beginning of the month we purchase $1,000 worth of supplies. When it comes to the end of the month, there's only about $600 value left of supplies. And we know that within the month we have $400 of supplies that turns into supplies expense. Okay, so this will be another example, how we adjust earlier the amount that we prepaid for supplies and adjust the part that we actually used up. Alright, so accrual accounting at the end disguises to do some adjustments at the end of the period because we want to have correct balances, up-to-date balances. So that's the whole purpose of this entire chapter. I want to bring up some of the accounts, so making sure that what is reported under financial statements is what actually it's the data that represents all the transactions that happened this month. Okay, now adjusting entries, it either affect a type of revenue or it would affect a type of expense. And then remember, each and every transaction has two accounts affected. So then at the same time, it will affect a type of asset or a type of liability. Okay, what we're trying to do, again, to bring up the accounts to its current status and to make sure that net income, assets, liabilities, the balances are correct. Right, so it either affects a type of revenue or a type of expense, and at the same time the type of asset and liability. So if I go back to that supplies example earlier, if I want to adjust the value of the supplies at the end of the month, what would be the two accounts that will be affected? Exactly. So that will be a type of asset account being affected, reduced. Supplies will be reduced from current asset account. And that part, Remember that example, if we had 1,000 before that we purchased up front, at the end of the month, if we only have 600 left, that $400 we'll be reducing supplies and turn that into supplies expense, into a type of expense account. So that entry will be affecting debit side expense, credit side asset. Okay, now for the earlier example that I gave you, the salary example, remember if we hired a person and when it reaches the end of the month, it's not the pay date yet, but the person has been working, the employee has been working for the corporation for some time. So then at the same time, we